All right. Before I get started, anybody have any questions that y'all need me to go over about the charts, about marking up your charts, anything? We can hit that first.
Do you have anything?
Any questions, everybody? Kind of understand where to mark off your swing highs and swing lows, overnight high, overnight low, triple threats, setups, gaps, you know, fair value gaps, how to find them, what they look like. You guys got that stuff pretty much locked in?
We're marking the wicks or the bodies
On which setup?
on the 1 hour, the 4 hour, the highs, lows,
Those are different setups. Okay, so the
difference.
time frame doesn't matter. It's what setup are you looking for? Are you looking for a triple threat or are you looking for a
Yeah,
gap?
when I'm setting up the triple threats,
Okay, so triple
do I
threat.
set up the bodies or the wicks?
Triple threat is the body,
Okay.
not the wick. Gaps, you count the wicks.
The high lows, the bodies,
The high and the low is the wick.
the wick. Okay.
Yep. The body is the open and the close. So you on a triple threat, you only worry about the open of the first candle that started the trend to the downside or the upside. So yeah,
Okay.
you're only worrying about the body part of it, the open.
Okay. Quick question. Thank you.
No problem.
Hey, good afternoon.
Hey, what's going on?
Charlotte's on here too. She's on the phone. She wants to say hi.
Outstanding. What's going on, sis? How y'all doing? You didn't send her the Zoom link. She just need to go ahead and get on the Zoom.
No, you want me to send
No,
her?
it doesn't work.
But oh, there she
Oh,
goes.
she's at work.
All right.
Over here vlogging and
You on Zoom, Charlotte. Charlotte got people. She tell them all the time.
ciao, ciao.
All right, bye. We logging off.
Those are my sisters. Love them to death. Okay, so right here is a 5 minute chart, right? So I have the time set at 8:44 in the morning. What I normally do right at 8:44 is like as soon as I sit down at the computer, I immediately go to the daily chart, right? I pull up the daily chart. That's the first thing I do. On the daily chart, you don't have to worry about all the candles and all that other stuff, right? On the daily chart, all you focus on is the very first candle. This one right here, the very first one. And on that first candle, I'm going to mark off the high and the low. The high and the low on a candle is the wick. The wick, the highest wick is at top or the highest part. And sometimes it's not a wick. Sometimes there's no wick on the candle. It can be candles like that. So what you do is you hit this little button up the top. It says data box, right? You open up that data box. All right. This data box right here is going to show you all the information per candle that you hover over, right? So I'm hovering over the very first candle of the daily chart. All right, is before 9:30, the overnight high and overnight low of the New York market. This is for people that trade the New York Open. Okay. The New York Open is from 9:30 till 5 o'clock. So the overnight time is just like a business, is the closure when it's closed. It's closed from 6 o'clock when the market opens up for Asia and is closed until 9:30 the next day when New York opens. So if you're going to mark the overnight high and the low, you want to mark between 6 p.m. at night all the way up until right at 9:30 when the new candle opens. So anything before 9:30 is the high and the low. So from 6 p.m. to 9:30 a.m. is the high and the low. You mark that off. Since right now the current time on this playback is 8:44 in the morning, I'll go ahead and mark off the high and the low of the very first candle. Now, if for whatever reason it goes above or below the mark that I already put there, I will adjust the high and the low as long as it's before 9:30, before the open. Okay? Everybody got that? Understand? So to find the high, you just look over here on the data box and say the high is 25742.75. Okay. So I put this little red line right here. I put that right at the top of it. And you see it's 742, which is the high, 74275. Right. And if you want to get exactly on there, you just double click on the red line. And right here where it says data, you could just type it in 25742.75. You can literally type it in because you don't want to guess where the high is or guess where the low is or move your candle as close as you think you can move it. You want to hover over it, see exactly where it's at, and just type it in. Because guessing could be especially on a daily chart, you could be off by a whole point. Same thing with the low. You hover over that, you see the low is 25448.50. Double click on that green line because my low is always green. Because I keep the low green because that lets me know if it gets down to that green line, I'm looking to buy up, which buy is always green. That's why I can turn that green. And sell is red, so I'd make the line up top red. But you just double click on that, and right there under data, it says 25448.5. You don't have to put the 50.5 is just fine. All right, so that's my high and the low. That's the green line and my red line. That's all I really look at on the daily. Now, that don't mean I don't realize that there's triple threats, there's gaps, there's a whole bunch of stuff going on the daily chart. The reason why I don't normally mark it off is because when you're new to trading, swing traders worry about different levels on the daily chart. We're not swing traders. We are scalpers for the most part. We scalp, and as you get better with scalping, you can sit in trades a little bit longer than normal. Okay, I want y'all to get used to getting 50 to 100. If you don't know your average yet, you need to focus on getting 50 to 100 per trade until you test out and find your average. Then you can sit in a trade a little bit longer. You got a cushion on your account. Okay, we're not going to be scalping for the rest of our lives. We're just scalping now because we're just trying to get 50 to 100 so that we can get to that past account and get to that payout. All right. Once you start building that cushion, you're going to be able to sit in trades longer. So on here, I still notice certain levels like triple threat. You got a red, you got 3 or more red going down. So this one right here is a daily triple threat. Now you got a while before it gets all the way up there. But sometimes I still mark it off with a white line just so I know that it's there. Same thing with down here. You got a triple threat green, 3 or more going up. You can mark, I mean, there's a bunch of levels on the hour and the 4 hour right here, but you can put a white line down here just so you know that it's there. Um, and it's up to you if you want to take that trade or not. I don't normally take trades off of the daily levels except for the overnight high and overnight low, but I still recognize if we're close to one. And then I just literally go down from there. I'll go down to the 4 hour chart. All right. And on the 4 hour chart, that's when I start looking for triple threats. There's a triple threat. There's a triple threat here. That's 3 or more going in one direction. That's also market structure. All right. You got 3 or more. Well, that's what that tells you. What that tells you is the start, this very first red one right here, that was the start of a trend to the downside. Anytime you have a 3 or more going down, that means it was a lot of liquidity pushing. There was a lot of sellers there pushing the market down to go down for what? That's 4 hours every bar. That's a lot of strength pushing it down, right? It tried to go back up, but it closed green, but it didn't go all the way back up there. So you see it's trying to go back up there again. You know what I'm saying? I still have that mark because it's still a strong area. But until the market gets up there and touches that brown line, I'll leave it there. Just like this little area right here. I'll leave it there because from what I know, it hasn't been touched yet. All right, so that's how I mark off that. So I normally mark off 2 levels on a 4 hour. I mark 2 levels above the current market and 2 levels below it. So this is level 1 that I marked that's above where the current market is, which is right here. That little yellow line right here is where the market is. And I find, I mean, I have other levels up here. That's because these are from, days before this. It just haven't been up there yet. The market has not gotten up here for me to have to mark off more levels or take them away. So I just leave them there until the market touches them. These levels can be 4 or 5 days. They could be a whole month old. If the market has not been up here yet, I don't delete it. I'll leave it there because it's still strong unless the market goes up there and touches it.
Hey, Will, I notice here you've got VWAP on. How are you using VWAP on the larger time frame?
Oh, I don't. It just I just switched from 5 minutes to a 4 hour, so it just stayed on there.
Okay.
Yeah, I don't use it at all on the bigger. Now, if I was swing trading, I would use it.
Got it.
Because when you swing trade, you're looking at the monthly, You're looking at the monthly, the weekly, the daily, and maybe a 4 hour when you're swing trading, because swing traders, they hold trades for days.
Can you open up your indicators?
Oh yeah. I was about to open them up because I'm about to remove that one so you can see clear.
I
But
just
yeah,
want
these
to,
are indicators I use.
I want to take a photo of it because my shit's all screwed up.
Yeah. Yeah, the only one that I pay for is this one right here, which is divergence. And I don't have price predictor up on this one.
How much was that divergence?
That one is back up to 250 now. It was a 199, but that was the Christmas sale or holiday sale. But yeah, it's 250 now. Normally 500, but you know, I get a 50% discount.
Mr. H,
Mhm.
um, the divergence indicator, like
Mhm.
when I'm using it and I see it indicates like a position to sell or buy,
Mhm.
and the arrow it actually moves with the candlestick, so
Yes.
it makes me unsure when to enter. You know what I'm saying?
So the way I trade that, when divergence pops up, say it's telling you to sell the market, right? If it's already near a level that you have manually marked, if it's near a VWAP level, if it's near any kind of other level, that's when I take it. So if it's telling me to sell, but I have a 1 hour level right there next to it, I'll try to wait for it to go all the way up to that 1 hour level, then I'll take the short.
Okay, so
You know what I'm
which
saying? Because
means
sometimes I don't just jump into divergence right then and there because it's a real time indicator. So it's just letting you know, hey, divergence is happening. Now it's just letting you know if you're gonna take a trade, I'd rather you take a short because it has an arrow. It don't necessarily tell you exactly when, but that's why you look at market structure, you look at your levels that you mark off, triple threat, gaps, and if it's close to one of those, I'm more likely to take that short. But if it's nothing going on and I see it pop up, I normally like to wait and see once the candlestick starts hesitating, then I'm like, okay, I'll take it because it's telling me to short. I just wait for the strength to die down a little bit.
yeah. All right. Another question.
Mhm.
Last time, the candle closed above the price line, the orange line, right?
Mhm.
And then I know this most of the time. There's an indication that the market is gonna go up. So after the next candle opened, it was green, but then the divergence indicator also popped up for a sell. But at the same time, the candle closed above the level. You know what I'm
Yeah.
saying?
Mhm.
So if it's like that, do I wait for the market to go up, or do I just buy it? Because now there's two options. Candle close above the price line. Now the next candle opened with a green and the
Mhm.
market is going up.
Yeah.
So I ended up losing the trade because I trusted the divergence indicator as it said sell.
Okay,
You know what
so
I'm
a
saying?
lot of times when stuff like when you have two indicators that are telling you, or not two indicators, but an indicator telling you to sell, where your levels are telling you that you should buy it. Um, without seeing it live is hard to tell because when when situations like that happen, that's when you start taking into account what's the market structure. Was it a good trend to the upside that popped up? Did
Mhm.
somebody put in an order in time and sales? Did somebody put in a big buy for time and sales? That's going to trump a lot of movement. So is not just one or two things I'm looking at. So if I see divergence telling me to sell, but my education tells me, hey, it's normally a good time to buy it. That's when I'll look at time and sales. I'll start looking at the market structure like, well, it's been going up the past 10, 15 minutes. I'm gonna trust my buy and I might buy the market. You know what I'm saying? Based
Yeah,
on the
yeah.
market structure. Because indicators, all they do is indicate an opportunity. Is no guarantee. Just
Mm.
because the indicator popped up don't mean it's definitely going down. If the market structure said the past 30 minutes, all you see is a bunch of green candles. Because once again,
Mm.
three or more going in one direction is a trend to the upside or a trend to the
Uh,
downside. So you don't want to jump and try to interfere into a trend.
Yeah. No.
Sensei,
Hmm?
can you explain market structure?
Yes. Okay, so with market structure, all right, so that's why I always teach you guys the triple threat, because triple threat is basically market structure. When you, even on the 5 minute chart, if you see three or more candles going in one direction, that's letting you know that is a strong push to the downside. It's a lot of sellers continuously pushing it down. There's always a reason for the market to move. So if I see a bunch of green, a bunch of red going down, I'm not going to just jump in to a trade to buy it because it's still a lot of sellers pushing it down. That's market. The market structure is going down. It's going lower. The lower candle is lower than the previous. So lower lows. Once it's and this is lower low is down here. Then the next candle drop down here. Next candle is going lower and lower. I'm not going to just jump into a buy. But once it starts, you'll notice when the market is going down, it starts slowing down and start hesitating. Once it starts hesitating, then I start to look for, okay, it might be a good time to buy it. Okay, it bounced off one of my levels, or I have an indicator right here saying it's time to buy it because it's slowing down. But if it's three or more going in one direction, and I see one close at an opposite color, so if it's red going down, and then I see a green close, and then it continued down, I feel more likely to take that buy because it slowed down a little
We
bit.
couldn't let them get away with it. You know, they stole our oil.
Yeah, sorry about that. But yeah, so that's what market structure is. It's just the same thing I've been teaching you. When you see a fair value gap, that's also market structure. That shows you that it's an imbalance in the market structure because it created a space that's not natural to be there. So when there's an unnatural movement in the market job is going to try to fill that area. So it's going to bounce off of it first, and then it's going to try to fill it. And you can look at every gap in the past, the market eventually fills it up. You know, because that's an unnatural movement in the market. That's market structure. So you always been looking at market structure. That's basically what support and resistance is the market structure. You're just finding areas to jump into a trade within that. So the triple threat strategy is market structure. You know what I'm saying? So even though we don't necessarily mark levels on a 5 minute chart, it's still letting you know when you see three green, three red going down, I'm not going to just jump and I'm not going to just place a buy at this VWAP level because we have three strong movements going down. So I'll wait till it swings down, and then on the way up, I'll buy it at that line. I'll buy it at the VWAP up on the way back up, not on the way down.
That's where I'm getting screwed up then.
Yeah, because see, market structure is telling me you got three going down. I'm not going to just jump into that buy right here. I'm going to wait to let it. It's called a sweep. The market does that is because I think I told you guys about it before. It's called stochastic differential equation. It's literally a mathematical equation that tells them the market based on market structure. They find support and resistance, the news, and trader behavior. They know how the average trader behaves. They know that we're a bunch of people sitting right there at that yellow line, like, oh, as soon as it come down here, I'm gonna take a trade. And it sweeps down a little bit, take your lunch money, then go up.
It was the one we used to have the old tree in, and the lid cracked when we had.
So yes, so that's why you'll hear me a lot of times. I say, don't just jump in yet. Wait to see what it does, because sometimes it'll bounce a little bit, then start going back up. You know, but when you see three or more going down, don't just jump in. Wait a little bit, and then buy it on the way up. Especially like like with dojis, right? Sometimes dojis can mean either a turn in direction, or a doji could mean a continuation based on what happened before that doji popped up, right? Like this doji right here. You see this one right here? It didn't really do a lot because it was no market structure going down. If we have three or four red going down, then a doji happened, that's indication a change in direction. But if you have a red going down, a green going up, and then a doji, that's normally continuation. Once again, that's based off of market. The market structure is letting you know it don't have a main direction. So it's most likely when a doji pop up is indecisive. So it's going to continue up because it was only one bar that was red, one that was green, and then a doji. Now, the only time a doji, to me, from what I practiced, The only time a doji indicates a change in direction is when you have 2 to 3 of the same color candle and then a doji. That normally means a change in direction. If you only see one candle of a different color than a doji, that normally means a continuation in that direction. So those little small little details play a huge factor in a trade. And that's why I want you to start learning those things. As time goes, you'll start realizing and seeing how they work out. And that's why you journal, because you'll be like, all right, I took a doji, it was only one green and it continued green. All right, I took a doji right here, it was 3 green going up, doji, the very next candle went down. Journal that so that you know how to trade those later on. Because you're not going to be able to remember every trade you take. So journaling is a strong factor on how you trade. Everybody has a slightly different strategy. I can teach you how I trade, and you'll take that a couple of months down the road and you develop your own little skill and strategy to trading. And that's what I want you to do. I want you to build something that works better for you. I give you the stage and the understanding of what you're looking at. But that was a perfect example of market structure right here. You got 3 red going down and a level sitting right there. Don't just jump in. Let it sweep down a little bit. And then divergence also popped up. You see, divergence was like, all right, we about to go back up now.
Appreciate you, Chris. You betcha. Thank you. Y'all have a good day. Happy New Year.
Oh. Okay. So any other questions? I hope that helped. First of all, did that help? Did that answer your question?
So let me just say this. Basically, market structure, a part of it is a change of direction.
Market structure is how the market is currently moving before you take a trade, basically. You know what I'm saying? So if you're looking at a level before you jump into a trade on a certain level, look at the market structure. And that's why I always teach you guys the triple threat, because if you see 3 or more of the same color moving in the same direction, the market structure is telling you it's a strong move to that side. So right here, these 3 going down, even though it's a 5-minute chart, I wouldn't mark that up to take a trade at the top of that. I just recognize 3 or more going down. Don't just jump to a trade because the market structure is telling you it's going short, it's going down. What told me that it was time to go back up was, for one, divergence popped up. And for 2, this wick is telling me once it started going back up, I would have jumped into the buy when it came back to the line, not when it first touched the line. Because when the market struck, when it's 3 or more going down and you try to buy it, that's like catching a falling knife. It's 3 or more. Now, if it's only 1 going down, I would have just jumped right in. If this was red, this one was green, and then this was red, I would have bought it. Because there's this green. If this was green, that means it slowed down the market structure of a trend. And that goes into my other thing that I was going to teach you, which is also part of market structure. I'll pull it up for you right here.
And that 3 candles that you have, sorry.
Oh, go ahead.
That's right. Those 3 candles are red. If that was a 4-hour or a 1-hour chart, because they're red, you would mark them right here at the top.
Well, yeah, I would mark this one, because
right.
It's 3 going down and then a green closure. So
Correct.
then,
and if
that
was
would
green,
be,
you would start at the bottom to mark.
Yeah, if it was 3 green going up, I would start with the opening candle.
Okay.
But on a 5-minute chart, that's just letting me know that it's a strong move down.
Right.
I'm not going to just jump into a trade.
I was just making sure on the 4-hour and the 1 hour.
Yeah. And which brings me to one of the things that I wanted to teach today, market, which is more based on market structure. Okay. There's 3, and y'all probably heard me say this before. There's 3 different days in the market, right? You have a trading range or narrow range trading day. That is 70 to 80% of the time. 70, 80% of the time is going to be a narrow range trading day, or sideways, or people say, oh, the market's choppy. Yeah, that's 70, 80% of the time. There's no reason to not trade. So characteristics: on these days, the market lacks a clear direction bias and price move within a confined balance range. The reason why I like to make money on narrow range trading days, because I can sit back and see where the market starts slowing down at the top and at the bottom. So if I see, hey, the market pretty much stopping right here, every time it get up there, I'm going to sell it. Every time it come down here, I'm going to buy it. It's a narrow range. It stays within a narrow range, or a sideways day. The other day, typical day, I call it test and retest. A test and retest wherever the market opens at, 9:30, wherever it opens at. Test and retest is when the market goes, it might go up and then it crosses the open. It goes down a little bit and then on the way back up, it crosses the open again. That is a test and retest because it's testing and retesting the open, that 9:30 open where that first candle opened at. They call it a typical day. I call it a test and retest because that's how I was taught. But those days are slightly more volatile than a simple range day, which this is considered a simple range day. Often beginning within a prior day's value an area, but experiencing a range extension in one direction before settling, and then it moves into another direction. So that is the typical day or a test and retest. Then you have your trending days. Market structure is trending wherever it opens at, it goes to one side, either above the open or below the open, and is down there the whole day. It either trend to the downside or trend to the upside. That is, as you see, 5 to 10% of the days. Towards the end of the year, it was way more than 10% because they was trying to push the market up. But for the most part, a trending day is 5 to 10%. A test and retest is 10 to 15% of the time. But most of the time, you're going to be trading in a narrow range trading day. So by understanding the market structure and what's the likeliness of that happening, it should help you, better trade because, okay, yesterday was a trending day. 9 times out of 10, tomorrow is not going to be a trending day. It's not going to have 3 trending days in a row normally, unless it's just a lot of news going on and it's just going crazy. But it's very rare to have multiple trending days in a row. And once again, that is also market structure is a trend, anything that is trending to one way. Typical trade day, as I said, that's a test and retest, meaning wherever the market opened, it's just going above the open and below the open all day. Above the open and below the open all day. It's still a range, but is clearing the open. Now, a narrow range, it goes on one side, either above or below the open, and it stays there all day. It just plays around that one little area. So understanding those days will help you also trade better. Knowing that, hey, we had a trending day yesterday, or we had a test and retest yesterday. Most likely today is going to be a narrow range trading day. As I said, I didn't want to flood you with too much information, but luckily we're talking about market structure, and those are the 3 daily structures that you'll see. Anybody need clarification on that part? Because that's not in the course. So
I think on your upcoming, what are you going to call them, Zoom classes or live trading with your group, I think a lot of that'll help.
Yeah. And that's why I decided to do that for this year so that you guys, I can better walk you through the trades that I'm looking at instead of being on TikTok and we got to kind of understand what I'm saying because I don't want to give away, y'all pay for the course. I don't think people should be getting all that information for free.
Correct.
But that's why I was like, I'm going to go live this year, at least 3 days. Right now it's Monday, Wednesday, and Friday. That way you guys can, really see, because I mean, if once you do it for like a good 2-3 weeks with me, you'll start getting a much better understanding of trading.
Monday,
you're in the other group with us as well. What's that?
Monday, Wednesday, Friday is the Discord or TikTok?
It's Discord. Monday, Wednesday, and Friday.
Okay.
And it'll be the pre-market, and I probably most likely I'm gonna stay there till about 10 o'clock anyway.
Okay.
But I'll definitely be on there about 8:30.
So Monday, Wednesday, Friday,
and Friday,
8:30 a.m.
Yep.
Okay.
That way, hopefully we can get some pre-market money. You ain't got to worry about the open.
instead of the Discord, why don't you just keep it on the Zoom like you are now?
It didn't delay me.
Well, I mean, because with Discord, Zeke helped me up set the stage, and
hold on, they all have hot mics.
Yeah, see, and that's why we're doing Discord, because I have more control over that on Discord. It's like a stage setup to where we could pick someone. If you have a question, we could pick you, and you'll be able to talk and say whatever you need to say. That way you don't have to worry about hot mics.
It's not going to be a surprise, and I had to
I have a quick question about what you shared about market structure. I guess what do you recommend as far as like studying and just drilling going over market structure?
Well, like I'm doing right now, just load up the previous
Yeah,
days.
what's up?
You could load up previous days and practice those
All right.
previous days. You could load up any day in the past, and that way it gives you the ability to pause it, fast forward, rewind, and really start practicing what I go over in the class, what we go over on the Saturday, all the Saturday session videos, and just really marking up your charts and seeing how the candles move. You could speed it up. What I used to do when I practice, I will put a resting order at every level that I see, and I would just fast forward it and just let it run at like ×5, ×10 speed and see how it hit every one of those levels and moved around each one of those levels. And I was like, ooh, that level, that I see why the 4 hours is stronger than the 1 hour. I see why market structure went straight through that level and bounced off of a different level. That's how I started practicing when I in the beginning. I would literally load up like a Tuesday and I would mark up my chart like a regular, like I'm about to trade it, and I would just take a resting order. I right click and go sell. All right. Then I'll pick another ATM strategy, and I'll be like, okay, I'm gonna put another one right here. You know what I'm saying? And I would just do that at every level that I marked off, and I would just fast forward it and see how it played around each one of those levels. Did it bounce and go straight through it? Did it bounce and make money, 200, 300? Like, that's how I practiced. It was almost like a faster way of practicing because I could just see how each one moved. And I would write down, okay, on Tuesday, this happened and this one hit better because I noticed it was 5 candles on the way up, and I'll write down how much it made, how much it lost. That's one way to practice market structure. Another way is always practicing, always running up. If say I traded Wednesday and I had a bad trading day Wednesday, that night I would load up that morning because you can always load up that day. All right. As long as it's after the time. So if you traded in the morning, you had a bad day at 6 o'clock at night, you can load up that same day and practice where you messed up at that day. So that's how I got better. Because I noticed, okay, I kept every time I took this trade, I lost. So instead of just avoiding that trade, I practiced that trade. And that was it was a trade, it was one I learned called mother bar, inside bar. I never liked it, but I still practiced it because I wanted to get good at it. And once I got good at it, I was like, that's too much work. I'm not gonna take that trade. I realized even though I got good at it, it was still a trade that I just didn't like. So I never took it again. But sometimes you just got to pick one strategy and just learn one or two strategies, and that's it. And just trade those two and practice those two.
Now, earlier you was talking about divergence,
Mhm.
and I think it was sometime this week when you was on live on TikTok, both the divergence popped up at the top and the bottom of that one candle. So how do you respond to that, or do you not?
Same thing. If it's telling me to buy the market, I'm gonna look at what's going on around that area. To reason why to buy it. Like this one that popped up right here, I wouldn't have bought it right here.
No,
I
but
would
it
have.
to say buy and sell on the same candle. Like there was one at the top and one at the bottom. I don't know if it was
Were
because
they
it
blinking? Because it's normally not at the same time. Like one might be blinking opposite of each other.
one was
But
blinking, one wasn't. Yeah.
okay, yeah. So one blinking, what it's telling you is if it's going down and it's blinking at the bottom, it's letting you know in this area we're hitting divergence. And when it goes up, divergence could be at more than one spot. All right, let's look. I'll show you exactly what divergence is. And that's I think I have it on this one already. Did I pull it up? Oh, that one ain't even pulled up. All right, I'll pull up on this one.
Hey, Larry, can you turn off your video and your mic when you're not on there? You got a big sun, whatever, right in back of you. It's blinding me.
All right, here it is, right here. All right, so with divergence, okay, there's two different types, right? You have the regular divergence and you have hidden divergence. You can't see divergence with your eyes anyway, but that's
Thank
why we
you.
have an indicator for it. So it indicates a potential trend reversal is coming, right? That's what regular divergence. Hidden divergence, this suggests the prevailing trend is likely to continue after a brief pause. Okay, so that's the two different types of divergence. We have regular divergence, which indicates a potential trend reversal is coming, means it's going to turn around. Hidden divergence suggests a prevailing trend, meaning if it's going up, is likely to continue after a pause. So if it's going up, it might stop for a little bit and then continue up. That's what hidden divergence is, right? So you have bullish hidden divergence and you have bearish hidden divergence. You have bullish regular divergence and bearish regular divergence. And in the indicator, it shows you all of those. So you have, so just saying that it's blinking at the bottom or blinking at the top, you have to look at the color that it's doing. So let's pull it up on indicators. So right here, regular bullish is red. Bearish regular is green. Bullish hidden is purple. Bearish hidden is light green. So understanding what bullish hidden is will help you better navigate what the indicator was telling you. Because if it was one at the bottom, which the one at the bottom, if it was a bullish purple, right? Which bullish purple is hidden, right? So bullish hidden, price makes a higher low, a shallow pullback, but the indicator makes a lower low. This confirms the underlying uptrend is strong. So if it's at the bottom, if it's a purple at the bottom, it's letting you know the current uptrend is very strong, is going to continue going up. Now, if it's a say it's a bullish divergence, right? Price makes a new lower low, but the indicator makes a higher low. This suggests selling pressure is weak and the upward reversal may be imminent. All right. So even though they're both at the bottom, they're telling you slightly different ideas of what's going to happen in the market. That's why there's a chance that they can happen. It can be one at the top and one at the bottom because they're telling you different things. But it just gives you an insight of how to trade it. So bullish divergence is letting you know that the upward reversal may be imminent because the selling is going down, is getting weaker, and might still a reversal, right? Bullish hidden is pretty much the same thing, but the indicator is looking at the higher high and a lower low versus a lower low and a higher low. That's why I don't teach higher high and lower low, because it could get confusing. But basically, when you see it at the bottom, look for a buy, but the color will tell you, is it a uptrend is stronger, or is it telling you that the downtrend is getting weaker? If the downtrend is getting weaker, that's when you see the divergence continue to move down for a little bit before it turns around, because it's not saying it's going to stop dead in its track. It's just letting you know it's getting weaker on the way down, and it signals an uptrend. If it's the other color, which is, I think, is the green, that means on the way up is a strong movement up. So that's the ones that normally, as soon as you see divergence, it literally stops and starts going back up because it's a strong trend to the upside. The other one is where it's slowing down. It ain't stopping yet, it's just slowing down, and it's gonna turn around, just not yet. That's the ones that I wait for a level that I already have marked, and I'll wait for it to get down to that level before I take that trade up. One is saying it's slowing down, one is saying it's turning around as a reversal. So one will pop up on the way up, it'll pop up, and one on the way down, it'll still pop up. Just letting you know that it's slowing down, but that don't mean it's turning yet. So that's why you have the two different colors as far as the regular and the hidden. If that helped. Where you see the purple, or you'll see either the purple or the red at the bottom. So like this one right here, you see that's a red one. So bullish regular is red, right? Bullish regular is red. So we go to bullish regular right here. Bullish regular suggests that the selling pressure is weakening and the upward reversal may be imminent, is weakening. So on the way down, it got weaker, turned back around. Now, if it was a purple one, it just confirms the uptrend is strong. So a purple one will pop up while it's already on the way up. The purple will pop up because it's already on the way up, showing how strong the move upward is. So the red ones are the ones that are still come down a little bit farther. And that's the ones that you have to wait for, more likely wait for a level. Did that help?
Yes.
Okay.
Message, What did you search? What did you search there?
Oh, that is right here. Pull it up. Divergence in the futures market.
Divergence. Okay, thank you.
Yep. And that's why there's different colors so you can tell which one is going on. They, as I said, they both tell you it's going to be a potential reversal, but one is telling you, hey, it's going to go down a little bit more. It's just slowing down before reverse. The other one is on the way up, letting you know it's going to keep going up. That's what the two different colors tell you. And the same thing on the way down. If you see those colors on the top of it. So that's how you determine how to trade it.
I just did a screenshot too and put it into the chat.
Oh, this right here?
In case. Yeah, I just did a screenshot of it.
Yeah, because and that's why I don't really teach lower low, higher low, low low, high high. It's like that's confusing as heck to me. Not to me, but when I first started learning, I was like, what are you even talking about? That's a lot going on there. So that's why I was like, as a beginner, I don't teach higher highs, lower lows, and you know, support and resistance is all you really need. But but that's what that means. That's what those mean.
I think I'll just watch the video again to just align the colors because I want to put them on my notes.
Oh yeah, those
So I can
definitely
have.
need to know the colors because they're telling you something slightly different. They're both
Yeah.
telling you to buy the market. They both telling you that the market is going up. One is just saying it's going up. Just wait, what I'm saying? Wait a little bit before you take that buy. The other one's like, it's on the way up. You better jump in. Basically. So, but yeah, that's the best way to go over that
I
one.
think that made it more clear why the arrow would move with a candle
Yeah. Yep.
same time. Yeah.
Yeah, because
Yeah.
when if that red one pops up, it's just letting you know, hey, it's slowing down. That don't mean jump right in. But if you have a
Yeah.
nice cushion on your account, you can jump right in. But normally it's just saying, hey, it's gonna turn around. Just let the pressure slow down a little bit. The other one is normally on the way up, is telling you it's gonna keep going. It's gonna keep going. Jump in. Now this right here, I know. Let me pull this one up as well. And this is also in the course. But this right here, I know this is better to look at than people telling you. Okay, so with markets, this is basically the candles, right? So the high is the wick. That's the highest point that the candle went, right? The wick. The low is the lowest point of the wick. But the open on the green is at the bottom. The close of the green is at the top because it opens at the bottom and then it goes up. Red open is at the top because red opens at the top and then it goes down because red is on the way down. So understanding that open and close, they're opposite on the green and the red, and then you have the body of it. So that's when I say overnight high and overnight low. You want to mark the highest point, which means you count the wick, and you want to find the lowest point, which means you count the wick. When it comes to a triple threat, we're looking at the body. Where did it open at? Because it opened here, it might have wicked up a little bit and came back down, but it opened here. That's where the start of it happened, is the open. The wick is just how high it went before it started going back down. But this is where it opened at. So that's why on a triple threat, we mark the open of a candle, of the very first one. All right. Because the high and the low just means it went there, but it couldn't stay there. So it came back. So that's what that means. So that's why that's important, knowing where to mark off your levels. Because if you mark off a triple threat and all you counting and you're counting the wick on a triple threat, you'll keep getting ate up on them trades and wonder why you're getting toe up. Because we don't care about the wick on a triple threat. We care about a wick on a gap though. And those structures are in the course as well with the candlesticks. And that's why I also have the charts showing you all the different types of candlestick setup, like the bearish engulfing, bullish engulfing. You don't have to learn all of them, okay? You don't have to learn all of them, but you still have to, it still helps to know when you see that setup happening. Because every one of these candlestick movements is some type of setup. Like this is considered a hammerhead. You trade hammerheads certain ways. You know what I'm saying? Like all of them all of them have little cute little names to them. But they're all telling you something different. They're all letting you know what's going on in the market. and you can trade. A lot of people trade solely based on what the candlestick setups are. You know, the only ones I pay attention to is the dojis and what happened before that doji popped up. And I think that's more than enough information because you don't have to know every setup that happens. Just pick like one or two and just look for those in the market because there's a lot of them. Let me see. Well, you go pull up the course because I have that in the course as well. Like this right here. I want to pull this up. Like this right here. Like this right here. These are all real setups that happen y'all probably see it every day. These setups happen every day, right? And you trade all these slightly different bullish. These are all setups that tell you that the market is going to go up. These are all structure that tell you the market is going to go down. It takes a lot of practice to learn all these, right? So that's why I say just learn like one or two of them. You know what I'm saying? Like bearish harami, bullish harami. I would just learn those, which is part of the setup of mother bar, inside bar, right? This is the mother bar. This little one right here is the inside bar, right? It's a bearish harami that indicates a downward trend. You know,
Amazon has a mouse pad with
Yep.
all this on it that you can like for $14 that you can put right in front of your computer.
Yep.
Just saying.
Yeah, or you could just print this out. You can do that too. I did that when I first started learning. I printed something like this out, and I just had it on the wall. You know what I'm saying? But you know, looking at this does help. Like, see right here, doji. You know what I'm saying? That shows you a doji. That's neutral. That's a neutral doji setup. You know what I'm saying? It's just different setups, like evening doji star. You know what I'm saying? It's all setups, different setups on the doji. You know, but just learn like one or two of those. You don't have to learn all of them. I mean, you can learn all of them. You'll be a master at trading. I tell you that much. Because these things happen all the time. You could go down the list and point them out. But but that's why I also put that in the course so people that want to learn how to trade that way and just trade off the candlestick structure. And that's still market structure. All that is market structure. So it's pretty extensive learning that way of trading. All right, let's see what's this. All right, so everybody got that part done. Or you guys need any more?
You say those patterns are market structure.
Mm-hmm. Yeah, those are considered market structure as well. Or you could type in candlestick setup. Yeah, but I only picked like 2 or 3 of those when I was learning how to trade, like 2 or 3. And when I see it, I know how to trade that one. You know what I mean? Because they happen all day. You're not going to catch all of them. But there are indicators. There's indicators as well that you can use. I think, where is it? It's right here, candlestick patterns. If you want to learn all of them, or if you want the chart to mark them up for you, you can say, okay, select a pattern. I'm going to select doji. You know what I'm saying? And you can have it, you hit apply, and you can have it mark off the dojis for you. So look, doji. It marks off the ones that a true doji is where it opens and closes at the same spot. But they still mark off everything that a doji or closely resembles a doji. You can use that indicator. It'll mark up every one of them for you. Just so you can notice and see that it's happening, where it happens at. You know what I'm saying? They have a lot of indicators on here, you know what I'm saying? But you just don't want to fill your screen up with a whole bunch of stuff. But they have them. Yeah, but they have candlestick patterns, and you could choose any pattern you want the chart to mark up for you. You know, they make it easy for you. They definitely make it easy for you. Let me remove that because I don't use that at all. Now I use that in the beginning. I mean, I tried out everything in the beginning, but I tried it out. And it works pretty good. It helps you recognize what the screen is doing and what charts are popping up, or what's popping up on the chart. All right, now let's go over that time and sales, because I know some people had questions about it earlier when I was live. So let's look at the time and sales. All right, so the settings on my time and sales. Go to properties. I have my block trade size at 60, and I have the alert number 1 on there, right? At the bottom where it says size filter, I put it at 6 because I don't want to see 1 and 2 contracts. I don't mind seeing six contracts or more, because most people that's doing 6 or more contracts, a little more seasoned, right? And anybody doing 60 or more contracts, 9 times out of 10 is a trade that I want to pay attention to. They're probably institutional traders, or they work for some kind of firm or some craziness like that. The average person like me and you are not doing 60 contracts. So they know something that we don't. So I like to mark off anybody that does 60 or more contracts. You could do it at 50 or more if you want to.
Hey, Will, this is gonna be a dumb question. How much money would you have to do 60 contracts?
A couple million.
Okay, that's what I thought. Okay, I was just checking.
You might be able to get away with, like, I don't know, 500,000, 200,000, maybe
200, at least
300,000.
300,000, I think.
At least. Because 60 contracts is a lot, brother.
Yeah, it's $300 a tick.
A tick. Yeah. Anybody willing to do 60 contracts, I want to know when they click that button. Please tell me. So that's why I put the alerts at 60. Now don't use this on micros. Don't put MNQ, because me and you could do 60 contracts of MNQ.
Right.
That don't mean nothing. Those big firms are not trading micros at all. They trade NQ or something bigger. So now you can still let the NQ pop up and take that trade on micros, though, because micros still moves based on what NQ does. It might be slightly off as far as the point where the point is at, but it'll still react the same way. And I do it for GC as well. So I have NQ and GC. You just hit the plus sign at the bottom. Also, the way I use time and sales is, say I see an area to buy the market. I jumped into a buy. If time and sales and I see a bunch of green, I'm going to stay in that buy for a little bit longer. But if I jump in a buy and I see a bunch of orange pop up, if I'm in profit, I'm going to go ahead and get out of that buy. I'm like, okay, I made my money. Let me get out the way. Because if you see a bunch of orange pop up, that means they're trying to push it back down. Especially if I hear the buzzer go off, I'm like, what was that? Okay, I'm in a buy and they just did 60 contract buy. I'm definitely staying in that trade because they're trying to push it up. But if I'm in the buy and I see 60 plus contract sell, I'm getting up out of there. I don't care if I got $50, $100, $250. I'm gonna get out. I'm gonna take my little profit and I'm gonna step back and see what happens for a little bit before I jump back in. Because as I said, the market moves for a reason. You just might not know what that reason is. So I'm trying to equip y'all with as much things that'll help you find out what's that reason for it moving crazy. Because I know y'all seen it. You trading out of nowhere, the market just shoot up. You're like, the heck was that? A lot of times that's time and sales. Somebody put in 130 contracts. I've seen a couple times where people put in like 250 contracts. That's going to make the market move. So no matter what Divergence told you, no matter what the levels told you, if somebody doing 200 plus contracts, it's going to move against whatever you thought it was going to happen. So that's why it's nice to have that little buzzer sound, so you know that something happens.
Mr. H?
You got that, Bobby?
Just to backtrack just a little bit, I sent a screenshot there. I don't know if you can see it.
I don't think I have it on. It's not on.
You know how to put it on? I don't know how to put it on.
All right, screenshot.
Yeah, you see how
I forgot how. I've been looking for it. I can't find it.
Go ahead.
You see how the divergence indicated there is green and is indicating, right? So now, in this case, because it's not at a level, rather wait until it gets to the open price line.
Yeah, you definitely can
If
wait
I
till it got
understood right.
there. Yeah, you can wait till it got there. So let's look. Now, what was the green? What was it? Let me see what the green one was. All right, let's look at that. Okay, so that was divergence. And green, that was a bearish regular. Was that bearish regular?
That's a bearish hidden. Am I right?
That was hold on, let me see what color was that? Is that a darker? That's like a bearish, yeah, bearish hidden. That's bearish hidden.
Yeah. Yeah.
So okay, so bearish hidden. Bearish hidden, it occurs when the price makes a lower high, but the indicator makes a higher high. This indicates the current downtrend is likely to continue despite a temporary increase in momentum. Temporary increase in momentum, but it's still letting you know
Temporary
it's
increase.
temporary. That's
It's still
why
gonna go
you
down.
see it still be going up and it's blinking like, hey, divergence, but it's still moving up. It just indicates that there's a temporary increase in momentum. That don't mean it's not gonna go down.
Yeah. No, I get it now.
So it indicates the current downtrend is likely to continue despite a temporary increase. So even though it's say, okay, it's time to go down, you might have a temporary increase before it starts going back down. So you just trade it slightly different. And that's why I say wait for, you'll start seeing it slow down at a certain level. It'll start bouncing. Then you can go ahead and take it down. Or sometime it will push up to that LIS level. That LIS is a strong level. So sometime it might push up there and then I'll take a short from there. But I will look left and see what's happening around that area that is causing that to happen. And I'll wait for it to get up to that level and then I'll take the short. But once again, that's the purpose of having a nice cushion. If you have a nice cushion in your account, you could jump in right there. You just take a little bit of heat, but it's letting you know it's still going to go down. Just when is the question.
Okay.
Yep.
Right.
So that's where understanding these colors come into effect.
Yeah. I feel like it's very important for everybody who gets like the divergence indicator to also get like some sort of education on the colors because just so they can have
and then
a
you
clear
could really just type in bullish regular, bearish regular, bullish hidden, divergence, and it'll give you a good breakdown.
Yeah.
But yeah, and also make sure your data input series is RSI. That's what Tyler suggested. But you could do other ones, but he suggested RSI, so I kept it on RSI.
Is he back from vacation?
He should be. But them people that got money like that, you never know. You never know.
Yeah, because I
But he
still
said he got his
to
laptop with him, so he should still see your messages. What's the H that pops up on time and sells? That's highs. That's when somebody puts in a trade at the highest point of probably of that day. So that's what the H means. B means like someone put in a bigger trade. So and you'll see an L also meaning they put in a trade at the low of the market.
I try to place that buy and sell indicator you used the other day, but it wouldn't go through. So I emailed them.
Which one? The price predictor? Oh yeah,
percentage
that
or whatever it was.
Really nice.
But it wouldn't go through for some reason. So I emailed him. Hopefully he'll give it to me at the same price.
Yeah, if you emailed him while the sale was still going, he will.
All right.
Because he's pretty good with that. Yeah, Tyler is he's a licensed trader. That's why he builds indicators instead of teaching, because he's not allowed to teach. Those guys are not allowed to teach.
That's weird.
Weird that he can't teach?
Yeah, I mean, I don't know.
You said you sign NDAs. You work for major companies. Yeah.
I mean, licensed electricians can teach. What's the difference?
is the market. You're talking millions of dollars
Right.
from one person. They don't want us learning this stuff. They do not want us learning this stuff. That's why, remember, before you had to have an Ivy League degree to even step foot on Wall Street, unless you was a janitor. You know, so yeah, that's just the way the market is. But with technology, guess what? They can't stop us now. We all in here. All right, we got any more questions?
Nah,
Because yeah, we went over the candlesticks, we went over types of trading days, and we went over the time and sales, because those were the questions that I had throughout the week. Well, not the type of trading days, but I figured I'd just add that in there for you guys because that's important as well.
I think Monday is going to be very interesting.
Yes, it is. Yeah, the
Who's
first
going to trade oil?
I'm not touching oil.
Me.
I haven't messed with oil in so long. I'll probably get toe up.
With Venezuela happening and all that shit? Shit.
Yeah. I'm not messing with oil. Oil is too powerful. It's too much going on with oil. Oh, it's always something powerful going on with oil because it's oil.
Isn't it usually slow though? Yes.
But that's the thing. That's why I don't like oil, because it's slow until something crazy happens and it just out of nowhere it just starts moving. You're like, you've been dormant for the past hour. You know, so yeah, I stick with gold. Oil news still affects gold.
Yeah, I like gold.
Yeah. Gold and NQ is the only ones I really deal with. Look at that. Look at that divergence. Popped up right near swing low. Swing low, divergence.
And that's the pink one. Pink, purple, whatever.
Yep. Yeah, knowing those colors. Look, there's a red one here, and it's still bounced up. So it's still letting you know there's divergence in this area. You know, some things don't just disappear. Just like with triple threat, just because it was yesterday, that don't mean there's not sellers still there or liquidity. There's still room to make money at all these levels. That's why you'll see I have levels from 2-3 weeks ago. I'll leave them up there because the market hasn't been down there yet. So there's still buyers and sellers at those levels.
Do you see any fair value gaps on that chart?
No, this is a 5-minute. I don't take fair value gaps on 5-minute.
No, the 5-minute gap.
Some people do, but I don't. I do not. But you see, it's still pretty much worked on some shorts now. Because and that's the thing. I'm not saying fair value gap on a 5-minute don't work. I just don't use it. Yeah, see 1, 2, and then the third one went through it, so I want to count that one. But yeah, anybody got any other questions that I can help you guys with?
I got something.
Mhm.
So I know it's 2026. It's the beginning of the new year, and I just want to say, like, let's go all in on this, because you've given out the information multiple times, and I'm gonna say this out of love from the bottom of my heart, and it's just like, y'all, we have to really apply ourselves to the information. We can't expect, because what happens if William decides, you know what, I'm done with this. I don't need to teach no more. I'm out. Will you be able to trade by yourself? And so I'll say 26, let's get to the payout. Let's take this serious, because the information, it works, y'all. It works. I've only been in here since September, and I've already got my first payout.
Hey, you got that payout. Outstanding.
And with that, like, I look at this, the market, I'm replaying this every single day. I'm not saying that I'm better or nothing like that, but I am obsessed with this. And so just the amount of time, and it shows who's putting in the work and who's not.
Yeah.
And so let's just take this serious and give it our all. And I'm saying this out of love and with the bottom of my heart. Quit playing with this, and let's just go all in this year.
Yeah, because it's life-changing. Trust me. Definitely life-changing. But yeah, but that's why I wanted to start going live with just the students, so I can get you guys to a payout. Because once I get you to a payout, my job is done, but that was my focus, was to get my students to a payout, because I don't want to have 300 students and nobody's making money. Like that's kind of just, I'll be like, hey, am I a good teacher or not? Like what's going on?
You are, because it's like I've never met one person that said, "Oh, I read the Bible and I understand it once. I understand the Bible," and you only read it once. You have to read it over and over and over and over again. You may have to watch the videos over and over and over
Yeah.
again, or watch the replays. Go look at the market like over and over again in order for stuff to make sense. You may notice something this time that you didn't catch this time or the
Yeah.
last time you looked at it. So let's just apply ourselves. That's all I'm saying. Apply, apply, apply. It works, y'all. This really works.
I appreciate
Like
that,
it's
brother.
changing my life. Like y'all should. My wife, she's seeing it and she like, oh, okay, I'm about to get this. I'm about to get that. So I mean, she already spending the money in her head. But again, we're trying to build the generational wealth. We're trying to change our whole outcome here, and he's giving it to us. He didn't have to do it, so we
Oh
can at
yeah.
least do our part, take the information at hand, because come Monday in the Zoom, I mean, it's going to be different. He's just going to be calling it out, and we should know exactly where to get in.
Yes,
Yeah.
and
I'm shutting
generational
up.
wealth is very important.
When I moved to Southeast Asia, I don't even need that much.
Oh yeah.
See,
Oh yeah. Oh yeah.
on top of my veterans disability, shit.
Would a disability make you a good $500-600 a day in the
Got my
market?
100% disability. All I need is a couple grand. I'm
You're
good
gonna
to
live
go.
like a king.
I know, right?
But
Quick
and,
question.
and I
All
was gonna
my
and that's the thing, I was gonna put that post out earlier today because I was reading and I found it says 70% of millionaires lose their wealth by the second generation. The second generation, their money's gone. Okay. So in the class, if you log into the course at the bottom, I have a company that will help you structure your businesses, help you structure your what is it, your trusts. They help you structure your trusts and everything. So utilize those guys. I don't know how else they charge, because they charge based on what your needs are. If you got 5 6 kids and you got 12 different sources of income and you need 8 businesses set up, they're gonna charge you a little bit more than someone that just needs one LLC set up. But check those guys out. Is Controllers Ltd. Okay, I don't want y'all busting y'all butt making this money, setting up investments and all this other stuff, and then your great grandkids tear it all up. You know what I'm saying? So really lock in and get that stuff done when you guys get a chance. It don't even take that long to set up your trust and everything if you don't have one yet. A will is not a trust, okay? You have wills, you have revocable trust, irrevocable trust. Learn that stuff, because that's how you take this money and actually build on top of it after you're gone, because that's what we're really doing this for, not just for ourselves, but if you got children, you're doing it for them.
Sensei,
Yes.
what about taxes? You got anything in there that speaks on taxes?
For the most part, once you get your LLCs and everything set up, that'll help you a lot with taxes. But with this, you're trading as a 1099. If you haven't got a business yet, you're a contractor for Apex, Bullinox, whatever the prop firm is. But you can just get a tax ID. You don't have to necessarily structure a whole business just yet. You can get a tax ID, which is free, and you could use that to get a lot of things set up under a business. And then you could use that same tax ID to register that business once you get the money to. But you could get a free EIN now. You just make sure you use that same EIN when you actually register the business.
You can
But
write off your
I would say get a tax
office.
ID.
You can write off your office, your new computer, all your
Yeah,
prop firm,
my courses are write off. The
everything.
prop firms, everything's a write off. So
Yep.
just get you a good CPA lawyer. And I prefer one in your area. That way you can meet them at the office and sit down with them and really get the understanding of what they can help you with, and if they ever even did taxes for people that trade the stock market. Because if they never did people that trade the stock market, you might want to find another CPA. But get you a good CPA lawyer, and they could. I mean, they cost about the same amount as H&R Block, to be honest with you. It's not like you got to kick out thousands of dollars because they're called a CPA.
One last question.
Mhm.
On your investments and the ones that you possibly are getting dividends off of,
Mhm.
do you pay taxes on the dividends? And what about if they're going right back to purchase more?
Oh, I'm about to say that like my dividends are set to just go right back in.
Okay, so do
You
you
only
pay?
pay taxes on something that you take out into a bank.
Oh, okay. Thank you.
Once you withdraw it, that's when they be like, hey, hey.
So,
And you,
Mr. H, I
you
have
can
a
write off
question.
losses too. Oh, go ahead.
What if you are over the age of 82? Because the tax structure changes and you have dividends, they're not even supposed to be taxed on X amount. So what do you suggest then if you're over the age of 82?
But that's when a CPA would take effect because I'm not really educated on that part of it. So
Okay.
I will hire a CPA or just contact one and ask. They're really good at just giving information away. They only charge you if they got to do actual work.
Okay. Thank you.
Yeah, but yeah,
Chat
it definitely
GPT.
changes.
Chat GPT will answer it too. I'm telling you, that thing's smart as hell.
Hey, Chat GPT is pretty smart though.
I use it for almost everything.
Yeah, that can also help as well. They'll structure a lot of stuff for you too.
Chat GPT or chat.
Yeah, Chat GPT will help a lot. That stuff answers some amazing questions. You're like, dang, that was good. But yeah, but you
Just
guys get a
just
CPA
to
lawyer as well.
conclude everything, if I understand, we have a Discord 8:30 a.m.
Mhm.
on Monday, Wednesday, and Friday.
Yes. Yep.
All right. I'm on
Yep.
South African time, so I just need to make sure I set an alarm for that.
Oh, that's right. You sure are, man. Yeah, hope you're having a good time, man. Enjoying yourself.
Thanks a lot. Thanks a lot.
And I'll still be on TikTok on Tuesdays and Thursdays. I'll still be on TikTok, still giving the sauce, at least until the marketing company starts really marketing. Then that way I don't have to do the marketing because I really go to TikTok for the marketing and helping people. But once my marketing company starts kicking in, because I just hired them for the new year, once they start kicking in, I'm not going to be live as much at all. I'll just be with you guys.
Awesome.
That's
Where's
why
that
for
going to
all
be?
the new people, the price is changing for all the new people because I'll be live with just the students a lot more. You guys are locked in. Y'all are already grandfathered in. So anything that I add to the course or change, you don't get affected by that because you jumped in at when the prices were where they were at. So I don't like nickel and diamond people.
Where's that going to be located in the Discord?
On the Discord, it would be literally right at the top. So in the Discord group,
Should be labeled
it's
Mr.
right here.
H's trade
Trading
stage or something like
stage.
that.
Yeah, trading stage right here. So right at the top, right here, trading stage.
I just want to offer something as well. I mean, I don't know how I would do it if it's on Discord or if you guys want to just DM me. It's Miss M on TikTok. But if you need help, like in a sense, like if no one else is praying with you, if you just need help, like maybe with some prayer, if you're feeling depressed, if you just need, something spiritual, I can help you with that. I'm really good with praying. So if you need help in prayer as well, hit me up. Okay.
Yep,
I need tons
exactly.
of help.
You
Amen.
need tons of help. Hey, get the help that's there. That's what we're
Amen.
here for. We are here to help people get to where they want to get, whether it's financial, spiritual, whatever you got to do to get into a better situation. But yeah, with that being said, guys,
Could you
anything
repeat
else
that?
before we close out?
Miss M, could you repeat that?
Oh, good.
Yes, yes. I was stating that if you, again, I believe in Jesus. I'm just, if you need prayer, of any, sort of kind, I can help you with that. I know I also have helped Lebo, if he can, testify. I've helped Lebo. Because sometimes we may get into too many thoughts in our mind. Sometimes the enemy likes to attack us, and I always say that the enemy likes to attack you. Why? Because he sees something greater that's going to happen. He sees that blessing that God is trying to give you. So he'll attack you any kind of way. Oh, you can't do it. You can't do this. you're not, you're not good enough. And so sometimes if we don't know how to attack that spiritually, get into that Bible, pray and stuff like that, if that's what you believe, the enemy will continue to get you into that mode, into that depression. We don't want that, okay? So a lot of times our thoughts are not our thoughts. So if you need help spiritually, I can help you with that. I'm really good with the
Outstanding.
prayers.
Outstanding.
Amen.
Yep.
Amen. I can
Amen.
testify to that.
And that's why I put that post up there. I said, if God put trading in your path, it's because you have what it takes to make it. You know what I'm
Yeah.
saying? That was a true post.
That's deep.
Because he put it in my path, and I was like, you know what? Let me go ahead and learn this. So it works. You know what I'm saying? But yeah, prayer without work is dead. So prayer and work works perfect together. All right, guys.
Mr. Hayes, nope,
Yep.
hold
He's a
on.
dope. What's up?
Look at me. I think it's something in the water here in Detroit. We need a Zoom call with you, man.
Okay, well, what's going on?
Same thing has been going on what I talked to you about a day or so ago.
With the charts and everything?
Charts and and she has the same issue going on. We can't figure it out. So could you help us out, please?
Yeah. What are you doing Sunday?
Waiting on you.
Okay. All right. Yeah, because let me see here, because I got a couple one-on-ones today. Um, let's see. Zoom.
After updating NinjaTrader, the divergence indicator will still be okay to work, right? It's not gonna
Yeah. After you update it, yeah.
change anything.
And if for whatever
Okay.
reason it's not working, let me know and I'll contact Tyler, and if he has to do something to update it, he will.
Yeah, because
Let's see. Marvin, are you guys available at 1 p.m. Eastern Standard Time tomorrow?
Yes.
All right,
Yes.
yeah. Let's do it because I don't have anything on my schedule at least.
Thank you. Thank you so much.
Yeah, for
And
sure.
Miss M, that's Miss M on TikTok, right?
Yeah.
Yes. You'll see like the um dang. You'll see like the glove and what is it? A rose, a glove. Mr. H, we follow each other, so you'll see me there too.
Yeah.
Or if I know your handle, I'll just follow you.
Okay, tic-tac-toe girl.
Is it Miss M or Mrs. M?
It's mrs.m. So however you want to,
M.
yeah.
I'm missing the dots. That's what it is. All right, got it. Thank you.
All right, and then, again, you'll see a what is it? What is it? A rose? I have to look at my own stuff. Goodness gracious! But you'll see me because I have Miss M literally in bubbles on my I'm the only one that actually have a whole bubble letter underneath my face. So it'll say Miss M.
Yeah.
It's like purple, blue. You'll see it. I'm the only one that actually has that on there.
Okay.
Yeah, you'll see that I follow her and everything too.
Any questions, Bob? Any questions?
I have to go. So thank you so much for
All right, man.
everything.
For sure.
I'll
Thanks for
see you
being here.
guys 8:30 on Monday.
All right, brother.
Hey, Debo.
Discord, right? Discord.
Yep. East
Awesome,
Coast.
awesome. Happy festive, guys. Enjoy your New Year's and let's be productive. Thank you, Zeke. Thank you, Mrs. M, for the motivation.
You're
Yes.
so
For
welcome. You're
sure,
so
man. Enjoy
welcome.
yourself.
All
All
right,
right,
thank
so
you.
yeah, so we about to head out of here. Once this mixed down, I will put it in the Discord so you guys can watch it again, okay?
Peace.
Everybody good? If you have anything else, just shoot me a message, okay?
All right.
All right.
See you
Y'all
later.
enjoy the rest of your day.